Yes.
Together? If you are together, then we need to respond with yes.
Yes, we are together.
Yes.
Thank you.
Together.
So I want to put these things down, especially when you talk about, and I've said you are getting the notes tomorrow. This week, I was a little bit having a lot of things on my mind, on my table, so I was not able to even to work on a number of things that I promised you, but I do promise that tomorrow we will be able to do that. So basically, when I talk about identifying, identifying, when you say that identifying, it's basically.
Excuse me.
Yes.
I missed on the introduction. I don't know if I was on the wrong link or what was happening. You've gone that far?
No, this is the introduction. I think the person who brought topic 2, we only talked about course outline, we did not do topic 2. Yes, so this is the first class. Sawa. Lavender, who is that communicating? Kindly your name.
Christabel.
Christabel.
Yes.
This is the start of the class.
No, I'm saying the start of the class. Okay, because I've seen you've written a lot of things and I was wondering, have I missed on something?
No. Not a lot. I've just defined. So I'm breaking down a number of things that I've talked about in the definition. That is what I'm doing. I'm simply breaking down that definition. So I've said that accounting is basically a process of 1 is to identify, 2 measuring, 3 classifying, 4 summarizing, and we talked about recording, then finally communicating all the financial information. So I'm defining what we mean by identifying. Together, team. Are we together? Christopher, yes. You respond. So I proceed to identifying. What do I mean by the word identifying? So identifying is the process, we call it process of recognition. You'll have this note, you can just make short notes. Recognition, I intend to give the notes. Recognition or non-recognition. What's called non-recognition? Recognition. Non-recognition is a process of recognition or non-recognition. We say of business, the process of recognition and non-recognition, the process of recognition and non-recognition, what we call non-recognition of business activity, of business activities, of the business activities as accountable events, So that is what we mean by identifying. So identifying is basically a process of recognizing or business or non-recognizing or business activity as a accountable event. Noted on that. If that is not it, we respond with a yes. So the second thing is on measuring. Basically, when you talk about measuring, say assigning. You're saying this is assigning monetary value, assigning monetary value or amount, monetary value or amount to the accountable events, Remember in accounting, all those items, be it a non-current asset, we assign a monetary value. That's why you'll find an asset. If you talk about a non-current asset, like land, there will be a figure to it. Together, team. Together.
Yes.
Together on that. So that's great if you're together. So then I proceed to what we mean by classifying. Classifying basically is posting. When you talk about classifying, you basically talk about classifying is recording, is basically posting information to various classes altogether. So when you talk about classifying, this refers to posting. Classifying, we talk about posting. posting, so we know that all account, basically all accounting, all accountable, basically say that all accountable events that are recorded in a journal, are then classified, or posted to the ledger, So when we record, after recording, I think I skipped recording. After recording account information, we then do what? We then classify or we post them to the ledger. Remember, what we start with is basically on recording. We have what we call the journals. Together, team. If we are together, I want to see a yes. All of us are we together? I want us to say yes if you're together.
Yes, we're together.
Yes.
Yes. The notes we have, don't worry about the notes. We just today doing that. Then we have what you call recording. Recording is basically, when you talk about recording is basically what you call the accounting term for recording is journalizing. This is basically journalizing. Journalizing. Open journalizing. All accountable events are recorded in journal. All accountable events, we say accountable events are basically recorded in a journal. So this happens with before classifying, we have before classifying, we know that we have recording. Then we have the term what we call communicating. We have what we call communicating. Another term of the definition of what is communicating. When you say communicating, this is basically passing information to various what you call various decision makers. So when you talk about accounting information, basically we say that accounting information is basically this information should be provided to users of accounting information. And users of accounting information, one, we have owners of business, we have owners of the business, we have government as one of the users, we have employee. So that is the aspect of communicating. The last we can talk about summarizing. I hope you can see summarizing. When you talk about summarizing, you're basically saying the items, we say that the items that are journalized, and posted, are summarized into five basic financial statements. That is what we summarize, whatever has been journalized. So that is on the definition. Together, team. Are we together?
And the last one.
I'm saying the items that have been journalized and posted are then summarized into five basic financial statements altogether. So those items, we can take them to the P&L, we can take them to the statement of financial position, or we can take them to the statement of equity. Are we together? Those are the basic financial statement. Are we together? After journalizing and posting, we then summarize them into what we call the 5x5 basic financial statement. That is what you say on that. So that is clearly the definition of accounting. Together, team. On that, are we together? Before I proceed to the next, is there any question?
No.
So I proceed to what's called objectives. Objectives of accounting. What do we seek to achieve with accounting? What do we seek to achieve with accounting? That is objective. Objectives of accounting. What do we seek to achieve with accounting? One of it is systematic. We call it the systematic recording of transaction. Systematic recording of transaction. That is what we seek to achieve. One of the objectives. So that is what we call bookkeeping. Systematic recording of transaction is bookkeeping. Accounting assistance in bookkeeping. Is that true, Jen? Jen, is that true? Systematic recording of transaction.
Yes.
That is the first objective of accounting. To record aspects of the business transaction, and that is basically bookkeeping. So the second objective, we basically say that ascertain is basically to confirm, ascertain of results of above transactions of the above recorded transaction. So ascertain of results of the above recorded transaction. Ascertain, I've said ascertain of results of the above recorded transaction, of the above recorded transactions. We are basically saying that ascertain of results of the above recorded transaction. To ascertain is basically to confirm altogether, to validate altogether. So basically we are saying that accountants prepare profit and loss account to know the business, whether the business results of business operation. Accounting prepares P&L, that is the profit and loss, to ascertain results of the business operation over a period of time. And you know that the P&L, for example, if you pick that one financial statement, is basically to know that whether the business is making a profit or loss altogether. If the revenue exceeds expense, that is one thing. And you know that if the revenue basically exceeds expense, then it is said that the business is profitable. But in a scenario where the business is, the expenditure is more than the revenue, what does it imply when the expenditure is basically more than the revenue? What does it basically imply? When the expenditure is more than revenue, what does it basically imply?
The business is
implies that the business is making a loss. The number three purpose is to ascertain the financial, we call it the financial position of the business. Basically, ascertain the financial position of the business. What do you mean by financial position? So a lot of time, and most business focuses on P&L. Is that true? Especially the smaller business. A lot of time they focus on the P&L. That is whether they're making profits and loss. But I find in many circumstances, these businesses do not even concern about the asset altogether. So when you talk about statement of financial position, this is a statement that we always have assets, capital plus liability altogether. It understands assets of the business, we have capital, and we have liability obligations that the business have altogether. How much do they owe? within how much do they owe in the short run? How much do they owe other people obligation that they have in the long term altogether? So apart from P&L, we have said to ascertain the statement of financial position, which essentially we call it the balance sheet. This we call the balance sheet. And in the balance sheet, we have assets, we have capital, and we have liability. So on that, again, we know that you'll be able to depict obligations, the liabilities that the business owes. You'll be able to know the capital that was contributed, and you'll be able to know the assets of the business. And in that P&L, you'll be able to understand that the assets that your assets, we need to ascertain that our assets should be in a position to cover our liability and capital. That's why we say on the statement of financial position that A is equal to C plus L. Together, team. Together.
Yes.
So then number 4, to provide users of financial, users to provide information, to the users on rational, what you call rational decision making. To provide information to the users on rational decision making. And that is basically to say that accounting aims to meet the objectives of the users. Accounting aims to meet basically information needs of the decision makers and help them in making rational decision. For example, one of the needs of the users or decision makers, one of the needs is, for example, for business to make profit. One of the needs maybe is to grow the asset of the company together. So in so doing, as they meet the needs, they're able to use that information to make decision altogether. Then lastly, we have number 5, which is called to know the solvency, what you call the solvency of the business. To know the solvency of the business. To know the solvency of the business. Solvency of the business. Or solvency, we call it solvency. Solvency position. So what do you mean by solvency position? What do we mean by solvency? That is the ability to meet business obligations altogether. That is what we call solvency decision, the ability basically to meet business obligation. And that is what we call liquidity position together. Then again, we're also able to know the long run solvency and when they fall due altogether. Long-term obligation and basically when they fall due. Together, team. If we are together, then we respond with a yes. Are we together on that?
Yes.
Yes.
Great if you're together. Then I want us to talk about elements of the financial statements. What you call elements. You'll have the note, elements of a financial statements. What are elements of financial statements? Elements of the financial statement. Elements of the financial statement. Elements of the financial statement. What are elements of financial statement? Elements of financial statement. What are elements of financial statements? We have 5 elements. 5 elements. Elements of the financial statement. What are those 5 elements of the financial statement? What are those 5? Like when you pick P&L, what are elements that are there? P&L basically have, when you take one of the financial statement elements, we have, this is basically income. We have expenses. On the balance sheet, what are those elements that we know are there on the financial statement? A very common question in a very common question in HTT. For those that are doing HTT, they can be asked elements of financial statements. I've given 2. We have income and expense, and this basically touches on the P&L. Apart from that, elements, what are other elements of financial statements? We know that on the balance sheet, there is statement of financial position, statement of financial position. We basically now have, what do we have on statement of financial position? On the statement of financial position, what do we have on the statement of financial position? We have assets. Apart from assets, what do you have, my good students?
Liabilities.
Liabilities. And last, we have what?
Capital.
And last, we have capital. So these are what you call elements of the financial statements altogether. A very common question in HTT. Allow me to, before we talk about that, just to wrap this up. Right. So what is the income when you say income? What is income when you say income? What do you mean by income? What do we mean by income? What do we mean by income? When you say income, what do you mean? as one of the elements of a financial information. What is an income? Elements of a financial statement. What is an income? What is income? Say income. What is an expense? What is assets? What is a liability? Liabilities? And what is capital? Simple definition. What is capital? What is liability? Elements of a financial statement. So basically, we know that income, we know that these two relate. I mean, all we need to understand that they relate to the performance of the business. They relate to the performance of the business. They relate to the performance of the business. Are set out in the P&L. Set out in the P&L. Then these three basically relate to them. We say they relate to the statement of financial position. They relate to the statement of financial position. They basically relate to the statement of financial position. They basically relate to the financial position of a business entity. So that is the key one. So when you talk about this, as I was saying, this was touches on the P&L, and this was touches on the statement of financial position. So P&L is basically on performance. P&L is basically on performance. P&L is basically on performance. So we can define what an income is. Income stock revenue. What is income stock revenue? So income is basically increase, what you call increase in economic benefit. Basically say that increase in economic benefit during accounting period. During the accounting period. Basically increase in economic benefit during accounting period. Or during the accounting period. Economic benefit during the accounting period. In form of, we say in form of inflow or decrease in liability which results in increase in equity and capital. So that is what we mean by an income. Expense as an element of financial statement. What is an expense as an element of? So expense is basically what you call decrease in economic benefit. Basically decrease in economic benefit. During accounting period. during accounting period, during accounting period, during accounting period, in form of outflow, in form of outflow, or increase in liabilities, which results into the reduction, which results in reduction in equity and capital, which results in reduction in equity and capital. That is what we mean by an expense. Together, team. If you're together, then you just respond with yes. Those are elements of financial statements. Noted? And the notes you'll have, don't worry. So even if you make short notes, there's no one. Together. Are we sorted on that? Are we together up to that very point?
Yes, we're together.
Yes,
Thank
we're
you so
together.
much. So when I talk about these three, because I'm going to talk about accounting equation, I'm going to talk about the three. Are we together? Like asset, these are properties of the business. We call them properties of the business. When you talk about liabilities, these are obligations that the business needs to fulfill. Capital stock equity, that is basically owner's claim on the business. And those also we are basically going to discuss as we discuss points on the accounting equation. But the key thing to understand as elements of financial statements, when you talk about assets liability, this one relates to the financial position of business, which is basically the balance sheet altogether. I want to proceed to what we call users of accounting information. Users of accounting information. Who are the users of accounting information and what are they interested on when you talk about users of accounting information? Number one, what are they really interested in? What are they really interested in as users of accounting information? What are they really interested in? When you talk about users of financial information, what do you think they're interested in?
Like they have the owners.
Owners, examples, Sapa. Examples of users. We have owners. Next, Konanini, an example. Government is a user. Government
Clients.
is a user. We also have.
Clients, or I don't.
You also have what?
Lenders,
Lenders,
like the
those
bank.
who lend money. Lenders. Another one, employees. We have employees. Employees. We have who again as users? Customers. We also have customers. Customers as users of financial information. And these notes are provided, we provide it. We also have, apart from users, those users, financial analysts and advisors. Financial analysts and advisors. Financial analysts and advisors. Financial analysts and advisors. Government and its agencies. We can have government and its agencies. Government and its agency. Apart from that, who are some of the users that we have not put there? Managers also users. Managers. So together, are you able to see those? Are we able to see those users? List of users. These are basically list of users of accounting information. Basically list of users of accounting information. Do you have it now? Are we able to see that? So what are users interested in before we begin to answer on each users and what they're interested in? What are basically users are interested in? They're basically interested in three aspects of the business. Users, we know users are interested on, users are basically interested on, users are basically interested in, we need to understand that they're very interested in entities position, comma, performance, and changes in financial position, and changes in financial position. So basically, we are saying that users of accounting information are basically interested in three aspects. That is entities position, they're interested in performance, and lastly, changes in the financial position. Together. And I want you to find those three things. Those three things. So we start with position. Entities position. What do you mean by entities position? David Ochola. What do you mean by entities position? I've said that users are interested in three aspects of the business. That is the entities position, we have performance, and changes in financial position. So I get back to position. When you talk about entities position, what do you mean by entities position? What do you basically mean by entities position? When you say entities position, what do we mean by the entities position? What do you mean by position?
I think by saying entity position, we can look at the performance of an organization. That is how whether the organization is making profit or loss.
No, that is performance. But that's a very good trial. That is on performance. You've answered on performance. But when you talk about entities position is the resources. We basically touch on resources. This is resources, the business has, and how much belongs to the owner, resources the business has, and how much belongs to the owner, and others. How much belongs to the owner and others. That is when you talk about entities position. So to be very precise, when I have A, which is assets is equals to capital plus liability. So your assets should be able to meet owner's claim on the business, which is capital, plus obligation. That is the short-term obligation, which is the current liability, and the long-term liability together, and the long-term liability. Are we there, David? Understood, David and Lavender?
Yes.
Jane? Great. So when you talk about performance is now what David was saying. Performance is what David was saying. Performance is what David is now what David is saying. Whether the business whether the business is making a profit or not. When we talk about performance, is now reflect. This is basically your reflects reflecting how the business is performing. Reflects on how the business is performing. Basically reflects on how the business is performing. Reflects on how the business is performing. Basically reflects on how the business is performing. Reflects on how the business is performing. Whether it's making a profit, whether it is making profit or the loss. Whether it is making the profits or the loss. Whether the business is making profit or loss. Then lastly, we have changes in the financial position. What you call changes in the financial position. So what is changes in the financial position? What do you mean by changes in the financial position? We say that entity position talks about resources, and to be precise, which resources belongs to the owner and which resources belongs to the others. And I've illustrated this using a bookkeeping equation. I have illustrated that using a bookkeeping equation. So what about changes in the financial position? What do I mean by changes in the financial position? When I say changes in the financial position, what do you think I imply? Just make short notes, changes in the financial position. Changes in the financial position. Jen, what do I mean by changes in the financial position? Jen is saying something.
If the company is able to okay.
The company
is able to meet its financial obligations in the future.
If the company is doing what? I can't hear.
I'm saying if the company is able to meet their obligations in the future.
You have tried. That's a very good try. But when you talk about changes in financial position, we say whether the business, that implies whether the business resources have increased. We're saying that whether the business resources have been increased or reduced. So that basically touches whether the business resources have basically increased or reduced. That touches on whether the business resources are basically increased or reduced. Have basically increased or reduced. Together, those are the three aspects that users of decision, users of accounting information are interested in. So I want to go to individual users and what they're interested in. Individual users and what they're interested on. Individual users and what they're interested in. So we can talk about owners. So who are owners of the company? Are they external users or internal users? Owners of the business, are they external or internal users? There's a question that normally sometimes is being asked. Who are the owners of accounting information? Are they internal or external users?
Could it be both? Because shareholders are external.
Shareholders
are external.
Shareholders are external. So owners can take the form. If it's a sole trader, the owner is what? if it's a sole trader, we can have, if it's a small business, the owner is a sole trader. If it's a partnership, the owners are partners. Then finally, if we call it a company, then company owners will be shareholders altogether. So very important, we need to understand that owners, in most cases, this will be internal what you call internal users. Owners will be basically internal users altogether. I've said that 3 owners. When you talk about these small companies, owners are basically sole traders. When you talk about partnership, owners in that case will be referred to as partners. And when you talk about companies, owners will be basically referred to as shareholders. What are owners of the business basically interested on? What are owners of the business basically interested on? Owners of the business. Why do you think they're very much interested in the business? Owners of the business. What do you think they're very much interested in as owners of the business? As owners of the business.
Investment is safe.
They're interested in?
To know if
The 3
their
aspects
investment.
are together. They want to know whether the business is making a profit or a loss.
Or loss.
They want to know their assets altogether and how much resources belongs to the others. They're also very interested in the changes in financial position. That is to imply whether the business has increased or reduced its assets altogether, has basically increased or reduced their assets, has basically increased or reduced their assets altogether. So they're interested in those 3 aspects of the business. They're very much interested on those 3 aspects of the business altogether. And in that line, we can talk about, is this business that they have, is it making a profit or not? How much assets belongs to them and how much belongs to the others? Should they inject more money into the business, or they can easily withdraw money into the business? That is what owners are very much interested in. Then we have customers. And the question that I want to have, customers, are they internal users or external users?
External.
Number 2 is customer. Customers are Lavender or Jody?
I'm not sure. I think they are external users.
Yeah, customers will be external. And to be precise, customers are also very much interested in the 3 aspects of the business. But to be precise, we need to understand that customers rely on the business. They basically rely on the business for goods, what you call for goods and services. They basically rely on the business for goods and services. And so they would like to know how the business is performing. If you are relying on a business, for example, that is making a loss, for sure you know that in the future, you're likely not to get those goods altogether. If a company that was supplying you with goods altogether, you notice that it's making losses, and it has been making losses for the last 10 years. Joseph, how are you, Joseph? Joseph is the new gentleman. Joseph?
Yes.
Hello, how are you?
Yeah, I'm fine.
You're fine. We are saying that the notes we will provide tomorrow, we will have those notes together. We will have those notes. We are discussing and making short notes. Is that not, Joseph?
Yeah, it's okay.
Yes, that is what you're doing currently. So, number 1, we need to understand that as customers, they basically rely, I've said that they're interested basically in 3 aspects of the business. They're basically interested in the 3 aspects of the business, and that is the position. They're also interested in performance, but at the same time, they're also interested in the financial position. But we're saying, to be very precise, the big customers who are external users rely on the business for goods and services, rely on the business for goods and services, basically rely on the goods and services. They basically rely on the business for goods and services. So why would they be looking at performance to know whether this business is likely to be continue supplying for them? So we can even note for those ones, right? They would like to know, they would like to know, they would like to know how the business is performing, how the business is performing, and its financial position. Then we just say that this info enables them to assess, this information enables them to assess whether they can rely on the farm for future supply. But that information is very important to enable them know whether they can rely on the farm for future supply, Then we discussed that is one and second. That is second. The third one, we talk about supplies. Number one, suppliers, are they external or internal?
External.
Those are external. And you know there is supplying goods and services. We know that they supply goods and services to the farm. They basically supply goods and services to the farm. They basically supply goods and services to the farm. Again, sometimes you realize that these suppliers basically supply these goods on credit. They basically supply these goods on credit. So again, they must know the credit worthiness. That's why they're interested. Supplier, I say suppliers either supply for cash, either supply for cash or credit. They either supply for cash or credit. They either supply for cash or credit. They would like to have info on performance. They would love to have info on performance. And position. So as to assess, basically to assess, we love to have information on performance and position, so as to assess whether the business will be able to pay for the goods and services, provided when they fall due. So whether they will be able to pay for goods and services when they fall due. Together, team. If we are together, then we respond with the yes. I want us to pick another user of financial information when they fall due. when they fall, you know. So we can talk about the next, that is a manager. Who are managers? Are they internal or external?
Internal.
Managers are
Internal.
basically internal. Internal. Managers are basically internal. Why do you think managers are very much interested in the statement in accounting information? Number one, we need to understand that involved. Managers are basically involved in day-to-day running of the business. The day-to-day running of the business. They're basically involved in day-to-day running of the business. Managers are basically involved in day-to-day running of the business. Why do you think they're very much interested in accounting information? As a user of financial accounting information, why do you think they're very much interested in accounting information? Why do you think they're very much interested in accounting information? So the three aspects, you know, position, performance, and changes in position, they're very much interested on those three aspects. And why? So this is basically, so as we basically say, so as to determine. So as to determine whether the business is operating as per planned. So remember, managers will come up with the management accounting altogether. They'll prepare budgets altogether. So they're very much interested in those financial information. They're very much interested in those financial information to determine whether whether the business is operating as per plan. Actually, the plans that they came up with in the budget, whether they're actually effective. So then we can have the next as lenders. Lenders. Who are lenders? Are they internal users or external users? And the reason why I discuss them in that manner is to make sure that sometimes you can be asked, give internal users, identify 4 internal users or external users.
Lenders are external.
Lenders are external. Lenders are external. We know that they are providers. They are providers of loans and other sources of financing. They are providers of loans and other sources of financing. They are providers of loan and other sources of financing. So we have lenders. Examples includes.
David Ochola, kindly mute.
You're saying somebody's.
David Ochola, kindly mute.
David, please. So examples include banks and what's called other financial institutions, called banks and other financial institutions. So examples of lenders are banks and other financial institutions. Examples of lenders are banks and the other financial institution. And other financial institution. Banks and other financial institution. Why do you think they're interested in accounting information? especially the performance, position, and changes in position. Why do you think they're very much interested in that? And I want us to get the concept. These are basics. Basics. Why do you think they're very much interested in that?
They want to know whether business will be able to pay back their loans.
Yes. So as to determine whether the business will be able to pay back their loans. They would love to have this information so that to know that these lenders are interested whether they are. That's why when you go to the bank will ask you for a number of things. The bank will ask for you for one of your assets, it will ask you for P&L. And apart from P&L, the bank will ask you for cash flow. The bank will ask you for P&L. They will attach your logbook if one asset that you have is motor vehicle. If you have a title deed, you'll see the bank taking that title deed because they're very much interested. They cannot give you a loan without assessing so that they understand whether you're in a position to pay back what you're taking. Then I want us to move to the next. We'll talk about next is government and its agencies. Government and its agencies. Is it internal or external?
External.
External. Definitely, but government is external. Why are they interested in accounting information? The position, the performance, the position, the performance.
For the purposes of taxation.
Yes, number one is for the purpose. Number one, interested in the accounting information for tax purpose. Apart from the tax purpose, other government agencies are interested in that information. Why are they interested in information? Apart from the tax purpose, why do you think they're interested in that information? Why do you think they're very much interested in that information? Why do you think they're very much interested in the information?
I think also for their own data collection.
Yes, like Kenya Bureau. If, for example, we want to classify a company, the middle size altogether, for data purpose altogether, like the Kenya bureaus, you want to identify the middle size companies, the large companies in the country, that is for data analysis. To carry out data.
I can't see the point.
Somebody is talking. Who is that?
Yeah.
What
Joseph.
are you saying?
The other side is not feasible.
I can't hear you. The only issue that I have with you, I can't hear you. Could you kindly speak your name first?
Joseph.
Yes, Joseph, kindly proceed.
I can see at that corner.
At that corner. Let me just read it. If you
Please
can't see, I will
adjust,
try and write up to this very end. Joseph, as that is noted, as I proceed, I will try and write on this other end up to somewhere here where you can see. But you're saying that the government Government agencies are interested in accounting information. One of the reasons is for tax purpose altogether. Then they're also interested to carry out data or statistics. Like the Kenya video, why are they interested in that information? They can classify these companies as either middle-sized company, middle-sized company, middle-sized company, middle-sized company, larger companies are we together, or SMEs are together. And lastly, not lastly, we can talk about the next. We can talk about financial advisors. Financial advisors. Financial advisors. So our financial advisors are basically accountants and many others. Why do you think financial advisors are interested on those aspects of the business? Why do you think financial advisors are very much interested? As you take a small break, why do you think financial advisors are very much interested on performance of the business, on the position, financial position, and changes in position? Why do you think they're very much interested in that? Why do you think they're very much interested in that? As we take a small break. As we take a small break, why do you think they're interested in that? Why do you think they're interested in that? Why do you think they're interested in that? Somebody should try as you take a small break. So as we take a break, you can prepare to give me that answer. So we can take a small break, then we come back. Noted, Jane. Jane, is that noted?
Yes.
Okay, we can have a small break. From where we stopped. Together, team, we are there. We have financial analysts and financial advisors and analysts. Financial advisors and analysts. So financial advisors and analysts. Financial advisors and analysts. And we say that these financial analysts, as we were approaching, as we were taking a break, asked the question. They're interested. I want to say that they're very much interested in the three aspects of the business, that is position, performance, and performance and changes in position. So why is that? To be able to come up. Why is to be able? We say to be able to come up. To come up with. To be able to come up with. Number one is to be able to come up with. To be able to come up with. To be able to come up with. Come up with or advise their clients, to advise their clients on the value of their investment. On the value of their investment, i.e., whether it is profitable, whether it is profitable or not. and what is the value, and what is the value. So that information is very important for search, because they want to advise the client on the value of the investment, whether it's profitable or not. Are we together? And we need to understand that when you talk about financial analysts, these are stockbrokers, accountants, but the key thing is basically to advise their clients on the value of the investment, whether it's making a profit or not, or at the same time, what is the value of the investment. We can pick on the last one. On the last one, that is employees. 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 So who are employees? Are they internal or external? Employees are basically internal or external. When you say employees, those are internal or external. When you say employees, those are basically
Internal.
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 Internal. Why do you think they're interested in accounting information? Why do you think they're interested in accounting information? That is the aspect of performance, position, and changes in position. Number one, to be able to make decisions on the terms of employment, on the terms of employment. Very important. If you ask, for example, today you're going for an interview, and a very common question, how much would you want to earn? Basically, you can just go to the financials, and you don't go there without information. And when you are told, are you ready to take 4,000 as a salary, and you say yes, and you've not even studied the financial of that company. So that information is very important for employees, basically, to make decisions on the terms of employment. So we say that the information is important. The information is important. The information is important. As they can use it, to negotiate for better terms, including salaries. Especially when you look at managers at the top. Why do you think they're given bonus? They're given bonuses based on performance, because they have access to such information. They basically have access to such information. Then you can have, lastly, the public. Public as the last user. Is public internal or external? Is public external or internal? Is the public external or internal? Public, is it external or internal? Public is external. So why do you think the public is very much interested in accounting information?
Because we are interested to know the general status of the economy.
For what? For CSR purpose altogether. Or for example, companies within a locality, they're interested to know whether the locals can be given employment altogether. But now even for social and corporate responsibility altogether. Charitable activities to the communities altogether. That is why the company is in turn, the public is basically interested in accounting information together for CSR and also for job opportunities for the locals. together, team?
Yes, yes.
Very important. And then I want you to do something for today. I want you to do something that is an accounting question. Accounting equation, just an introduction. What is an accounting equation? When you say accounting equation, what is an accounting equation? What is accounting equation? What is accounting equation?
Asset is equal to capital plus liability.
Definitely that's, but it's also called the basic accounting equation. Then we say forms. We say forms the foundation. It forms the foundation. It forms the foundation for all. We say foundation for all accounting systems, for all accounting systems. It forms the foundation for all accounting system, for all accounting system, for all accounting system. So say accounting equation is assets. Assets is equals to capital. Capital plus liabilities. So that is basically what you call accounting information. Accounting equation is equals to assets plus assets equals to capital plus liability. Liability is equals to assets plus liability. Liability. Are we together? Is equals to assets plus liability. Liability. That is to imply that assets equals the sum. We say the sum of liabilities and owner's claim of the business. So in our next class, we'll start with assets. We'll define assets. That is where we start in our next class. I'll now get back to the students. If you have any question, you can ask, but for today, I will beg to stop at that point. From tomorrow, we'll be extending. When I get here to 15, we'll be finishing our class by 10:15, 10:20. That is what we're going to do in our next class altogether. We must cover those 2 hours. But I beg to stop at that point. I want to wish you well, wish you a good night, and just urge you to continue the good work. Show up for class, don't miss class.
Sorry, before we conclude,
Yes.
I have a concern. We discussed about the extra class that you asked for,
Yes.
and we agreed with our class rep that it was to be 5:30 in the morning.
5:30 in
We
the
leave
morning.
it there.
Yes, I also still have an issue with but anyway, that's mine to talk with the management. Let me just consult with the management. There was still some issue that we had, but let me talk to the management. Are we together? And then we'll
It's
arrive
okay.
at some conclusion. I will be able to share that tomorrow. Is that okay?
Okay.
Yes, tomorrow in our next class. So God bless you and have a great night. Asanteni sana. Unless somebody asks something, a representative, Jane, is there anything that you have?
No, just what Lavender has said. That's what I wanted to ask,
Okay.
but it's
Thank
answered.
you.
Yes.
We can now leave and rest early today.
Okay.